Okay, so Intel. It's presenting this really profound contradiction, right? The operational comeback narrative, well, it seems real.
It does, yeah. There's substance there.
But then you look at the stock valuation and it looks pretty stretched, maybe severely stretched. So we need to sort through these conflicting signals. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we are doing a deep dive into Intel Corporation, ticker INTC, based on our research captured on October 28th, 2025 at 6:42 a.m. ET.
And right off the bat, we should probably acknowledge the macro backdrop, because that really sets the stage for risk here.
Good point. What's the picture?
Well, futures are looking slightly green this morning, a little bit of cautious optimism perhaps. But our research flags something pretty serious. Moody's just put out a warning.
Oh, about what?
They're saying nearly a third of the U.S. economy, and specifically big hitters like California and New York, is either in or very near recession.
Wow, okay. That's definitely a tough headwind for any growth story.
Exactly, it hangs over everything.
Right, so that macro gloom is, a serious warning. But let's dive into the actual company data for Intel. The turnaround narrative, it seems to have legs.
It really does. Q3 results, they beat expectations.
Yeah.
And that was driven largely by surging AI demand, which is, the hot area.
And they've secured financing too, right?
Huge financing. We're talking $20 billion new funding overall. That includes a pending $5 billion chunk from NVIDIA.
NVIDIA getting involved. Interesting.
Yeah, and they're expanding strategically too, boosting advanced packaging operations over in Vietnam and also in New Mexico. They seem to be building a bit of a moat, trying to insulate themselves.
Okay, building capacity, getting funding, sounds good, but what's the catch?
Well, here's where it gets really interesting, the cost of this pivot. The focus so hard on AI and foundry expansion. Intel has slashed over 35,000 jobs in just the last 2 years.
35,000, that's massive.
It is. And the market, it loves this story. But if you actually look at the, let's call them legacy earnings, one analysis we saw pegs the earnings-based fair value estimate at only $14.67.
Whoa, okay, hold on, $14.67 when the stock's been trading near $40.
Exactly, that's a massive immediate valuation conflict right there, a huge gap.
A $14 price target, though, I mean, that feels almost disconnected from the reality of the AI pivot, doesn't it? Surely that future value, the high-margin foundry business, that's got to be baked into the price somewhere.
You'd think so, right? It should be. But Wall Street, while they seem pretty nervous, our research shows 74%, almost 3/4 of analysts, still rate Intel a hold.
74% hold. That's not exactly a ringing endorsement after such a run-up.
Not at all. And get this, the number of analysts with outright sell ratings has actually doubled in the last 3 months. So there's deep caution about this price level.
Okay, so fundamentals in Wall Street are cautious, maybe even bearish on valuation. But what about, the crowd? What's the sentiment telling us for the immediate trade?
Well, that's the other side of the coin. The crowd is overwhelmingly bullish.
How do we see that?
Look at the options market. It's flashing bright green. The put-to-call ratio we found is just 0.36.
0.36. That's low. Really low.
Extremely low. It means options traders are betting almost 3-to-1 on more upside. They're basically ignoring that valuation concern, or at least betting it won't matter short term.
And short sellers, are they piling in?
Nope, hardly at all. Short interest is minimal, just 2.44%. So the bears aren't really placing big bets against it right now.
Okay, so sentiment is clearly bullish. What about the charts, the technicals?
Well, connecting the dots, the powerful technical uptrend really validates that euphoria you're seeing in sentiment.
Yeah, that move was something.
Absolutely. The stock just exploded, didn't it? From the mid-20s up towards $40, and it was backed by consistent, strong money flow. You just have this powerful, undeniable, bullish trend.
Okay, strong trend, strong sentiment. Where's the risk then? There must be something.
There is. And this is the critical warning sign we need to highlight from our research. It's technical. A key short-term momentum indicator has just flipped negative.
Ah, okay. Momentum's waning.
Exactly. It signals that the really powerful acceleration we saw, well, it's losing steam. It might be ready to consolidate sideways or maybe even reverse. Volatility is also high, so expect big swings anyway. But that crack in momentum, that's the first major technical warning sign.
Right. So bringing it all together, strong story, iffy valuation, bullish crowd, strong trend, but weakening momentum. What's the verdict from our research?
It leads us to a cautiously bullish outlook.
Cautiously bullish. Okay, explain that. Why stay bullish at all with that huge, $14 versus $40 gap and the momentum warning flashing?
Because right now, the trend The volume behind it and that euphoric sentiment are just too strong to ignore completely. You have to respect the trend until it definitively breaks, you see.
Gotcha. Don't fight the tape, but be ready for it to turn.
Precisely. And this gives us a really clear strategic playbook for you. The key battleground number to watch is $40.67.
40.67, the recent high area.
Exactly. The stock really needs to break above that and hold it to signal that the positive momentum is back in control.
And if it doesn't, what's the downside level where we say, okay, this bullish idea is broken?
That's the critical line in the sand. Our invalidation level, the point where our short-term bullish thesis fails, is that recent support low. It's around $38.23.
38.23, okay.
Yeah. A break below that level signals that the momentum warning was right, and the bears might be taking over in the near term.
Okay, so respect the trend above $38.23, watch for a break above $40.67, but know that below $38.60, the game changes. That makes sense. So the final thought for you listening, Intel looks like a high-stakes play right now. It's driven by massive sentiment and that strong trend, which means, yes, you probably have to respect the current trajectory, but you absolutely have to know your exact exit point before you even think about entering a trade. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.